योगा का लेकिन ये लाइव ऑन यूट्यूब पे लाइव है। यूट्यूब पे इतनी सारी वीडियो 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 पे लाइव है। यूट्यूब पे इतनी सारी वीडियो
Hi, DP. Hello.
Hi, Shubhada. I think you're already there.
She's not showing guide logged in.
DP, can you unmute her, Shubhada madam?
Hello, ma'am is logging in again, I think. She's
Okay,
not.
fine. She entered and now again she is trying to log in. Okay, fine. Vietnam college now. Hi, Shubhada. Will unmute. Hi, can you hear me? DP sir, can you unmute Shubhada madam? IIT exam cancel. IIT
Hello.
Hello, yeah, Shubhada,
Yeah.
we can hear you.
Now I can hear you. Now it is audible. Now it's
Yeah, because we had kept it on mute.
Oh, okay.
I think we'll just wait for another 5 minutes, maybe.
Sure, definitely.
Then Dr. Himanshu will start with the
Hello,
proceeding.
madam. Yeah.
Hi, Himanshu. How are you?
Hi, I'm fine, madam. Thank you. How are you doing?
All good. So all safe and sound and indoors.
Yeah, that's what we wish for each other, correct?
Right. So yeah, it's not abating yet, though we've flattened the curve, but I don't
Right.
think we are seeing any drop in that shape of the curve. Actually,
True. Yeah.
so that's fortunately the mortality rate remains under control. It's under 4%, so
Yeah.
that is positive. But I think
Yet a long way to
Good
go.
afternoon.
yeah. We have a long distance to cover, so it's going to be a tough one.
Shubhada Madam, we have participants from different colleges.
Okay.
Yeah. So,
Hello, everyone. Yeah. So do let me know, Usha, when I can start.
yes, I
and,
think whenever Himanshu sir will, our
Yeah.
main Himanshu sir would begin. I think so.
Sure, definitely.
Sure, madam. Madam, we'll start in 2 minutes. Yeah.
Not a problem. No hurry. Good afternoon.
I know everyone is waiting to see each other.
Yeah, exactly.
Yeah. Hello. Good afternoon. Good afternoon. DP sir, can we begin?
Maybe around
Yeah, ma'am, you
3-5.
can.
Yeah.
Yeah, you can begin.
Himanshu
Shall I?
sir?
Yes,
Yeah.
madam. Shall we? Okay. So, a very good afternoon, ladies and gentlemen. On behalf of Hindi Vidya Prachar Samiti's Ramnaran Junjunwala College, I extend each one of you a very warm welcome. As you know that India has entered into the third phase of lockdown, and the way the things are, it appears as if slowly the social distancing is going to be the only new normal of our life. Nevertheless, in the middle of such crisis, what is more important that we all remain together and we remain connected. We keep our minds sharp and we keep our thoughts positive. Keeping this in mind, I'm very happy to share with each one of you here while welcoming you all also to this RJ College series of guest speakers where we have experts from different walks of life sharing their thoughts, sharing their perspectives, and sharing their also opinion as to what the life should be, whether COVID-19 remains, whether COVID-19 goes away, before and after. I'm very happy to share with you that we begin today the series of lectures with an expert who is with us, Dr. Shubhada Rao, a former chief economist at Yes Bank, the name not unknown to Junjunwala family. She is a well-wisher. She is a great friend indeed for
Yes.
Junjunwala College and had always been there, just a phone call away. Rao Madam, thank you very much for accepting our invitation
Thank you.
and being with us today to
Thank you,
deliver a talk.
Manshu.
To
Thank you.
begin the proceedings of the day, I would like to first invite our head of the department, economics, Dr. Sucheta Joshi, to formally introduce our guest speaker today. And she would also explain the format of this meeting If we follow the rules laid down by her, we'll be able to have an uninterrupted content delivery by our speaker, and also at the same time, whatever questions that comes in our mind during the talk, we'll be able to address all of them and put it to our guest speaker. So welcoming each one of you present here for this guest lectures series. First lecture, Dr. Rao. I now invite Suchata Madam to introduce our guest and also tell the format.
Thank you so much, sir. Uh, Good afternoon, one and all. It is a really great honor for me to introduce Dr. Shubhada Madam, who merely needs any introduction though. Those who follow regularly CNBC, ET Now, or BBC World must have seen Madam very often, quite regularly, sharing economic views on various issues facing the world as well as Indian economy. Dr. Shubhada Rao was the former senior group president and chief economist at Yes Bank. She was responsible for business economics, banking, providing macroeconomic research outlook at the bank. Shubhada Madam has a very wide experience of 30 long years in academia and industry. She has worked with marquee financial entities. She began her career in banking with ICICI in their planning and treasury department after completing a PhD in economics from the University of Mumbai. In the past, she has held various industry association positions such as chairperson of Economics Committee of Bombay Chamber of Commerce and Industry, BCCI, member of CII National Economic Policy Council, New Delhi, co-chair of the Economic Committee of ASSOCHAM, and member of the Monetary Policy Group, Indian Banks Association. As a thought leader, she and her team have made extensive presentations on Indian economy to central banks, including the Federal Reserve Bank of England, Bank of Canada, ministers and delegations or secretaries of state of the UK and US Consul Generals, G20 IIF meetings, among others, to present views on Indian economy. As I said before, her views are often aired on domestic and international electronic and print media like CNBC, ET Now, BBC World, CNN, Bloomberg, and local business dailies. Her team has consistently ranked among top 5 forecaster of Indian economic indicators of Bloomberg. With a very strong research background, currently Madam is working as an independent economic consultant. Apart from her credentials and achievements in the academic field, I would also like to mention her human aspect. Madam has broken the conventional belief that economists are necessarily to be the people with a straight face. But as you have seen in the beginning, Madam has a very pleasant and optimistic personality and nature, because of which she always stands out in the serious crowd of economists. Madam, we are very eager to hear from you, but I would just like to repeat what Sir has said in the beginning. I request everybody, if at all you have any questions in your mind, we are going to take up your questions. But at the end of this session or the lecture, as Madam finishes her lecture, please give your questions in the chat column that we have at the right hand side. We will take each one of them, if time permits, at the end of the lecture. Madam, we are really very eager to know your views about how India is going to be post COVID-19, which is really an issue burning right now and affecting each one of the people of all stratas of the economy. Madam, it is open for your lecture.
Welcome,
Thank you.
Shubhada, and
Thank you, Usha.
you may start. Thank you.
Thank you, Usha. Thank you, Sujata. I think you've been saying too many kind words about me. So I feel a bit flattered and honored about all of it. But here I am. I think the topic, as you may see, is a post-COVID-19 India, a reboot and reset. Now, the key word is a post-COVID-19. It sounds at this current juncture a little bit distant from where we are in the current position, where we are adding new cases every day. India has touched close to 50,000 COVID infections. Fortunately for India, there seems to be an increasing evidence of flattening the curve. That means we are not adding incrementally or doubling the cases in lesser and lesser time. We are taking longer number of days or many more number of days in doubling the cases. Thereby, we are somewhere flattening the curve. However, the key point of concern is we have not yet seen a drop in that curve or a decline in that curve. And until such time, COVID responses will need to be on all fronts, on health, on economy, on personal, physical, emotional, financial, all of the aspects of all the Indian citizens will have to be reset in a way. And that is the reason I have subsequently named it as Reboot and Reset. Now, the first point is, there are considerable amount of debate and discussions going as to where did it originate, whether it was in lab or it was in the air and accidentally it spread around. I think that will have to wait until we have some concluding evidence in terms of what was the true origin of this virus. But suffice it to say that it is an extremely potent virus. The strain looks very potent, and as we have it, the world over, almost all the countries have been affected by it, and the high degree of its contagious nature has ensured that the intensity of the spread has been rather rapid and quick, right from December till now almost beginning of May. Having said, I think, from an economics point of view, I'm an economist, so I obviously would want to focus a lot on how do we deal with this situation? What is this crisis? How different is this crisis from the earlier crises that India has seen, which have manifested on the macroeconomy of the country? The closest we came to is the recent most, which is, I'm sure, in all our memories, is the global financial crisis. Global financial crisis did have a huge impact on the global economy, both in terms of growth, in terms of the regulatory dynamics, the central banking dynamics, and so on. But important and very key difference between the two crises, that is one of 2008-9, which is the global financial crisis, and the current one, is that the earlier crisis originated in the financial sector excesses, and they were essentially restricted to most of the damage, coming first into the financial sector and then onto the real economy in terms of employment, growth, and so on. Unlike that kind of a crisis, a very different crisis this time round is a health crisis. And that health crisis began to enforce lockdowns across the globe, India included, massive lockdowns. So that had an impact on the real economy. When I say real economy, obviously we have seen how the manufacturing and services absolutely came to a standstill by the end of the last week of March, that is. And from the real economy, it had its manifestations on employment, on income earning, and also, therefore, overall sentiment in the economic agents across the country. So what I would like to do over the next 20 to 30 minutes is essentially take you through what has been the first impact in terms of the lockdown that was timely and necessary, that was announced by the government. It was timely because if we hadn't announced a nationwide lockdown on 25th of March, we probably would have seen a serious proliferation of the disease, or the spread of the disease would have been humongous without any control. What the lockdown did was it allowed India's governance structure to put in place, to the extent possible, the medical and health infrastructure. So to that extent, in a way, there was a breathing time allowed for the medical fraternity, hospitals, the doctors, the personal protection equipment, manufacturing, all of it, or imports for that matter, all of it to become more meaningful so as to tackle the fallout of the COVID-19 spread. And the lockdown also, therefore, the negative impact of it was essentially all of India's economic activity virtually came to a standstill, except for the essential services. What were those essential services? Obviously, the food supplies, the agriculture, the medical services, the pharmaceutical industry, and some basic logistics, allowing the transfer or transport of food supplies from the place of origin, from farms to the cities, to the wholesale markets, as also the pharmaceutical industry, which was producing the medicines and required to tackle the current disease and its treatment to the extent possible thereafter. Mind you, we still do not have a vaccine. We do hear sporadic news about Israel having made some breakthrough as recent as yesterday, or we do have some, via media kind of a stopgap medicines that we have identified are helping contain some of the, mortality that otherwise would have been seen in the country and elsewhere also, but it's a slow process. So what we are in the midst of is only focusing yet on essential functions that need people to just survive. The problems after the lockdown were humongous. As I said, manufacturing came to a standstill, and India, where it is hugely impacted, is in terms of the labor participation, the workforce. What we did see in the ensuing days was a problem of migrant labor, which we are all aware of. Let's not forget, India's manufacturing and services together have, to the extent of 70 to 80% of migrant labor in their factories, in their essential workplaces. And that implied that there was a huge disruption or huge shortage of labor force in terms of the availability as and when some bit of a lockdown is eased. So migration of labor was a big problem, which is still getting tackled by allowing them to go back to their home, which also in a way impacts the manufacturing activity. If you look at the PMIs, I'm sure a lot of you are economic students and you must be reading the newspapers and business papers, which have actually said that PMI is a purchasing manufacturing index, which measures, or which is a barometer of the current and future economic activity sentiment. And we recently saw the manufacturing PMI decline from 51 to 27, which is basically anything below 50 is contraction. That means what we are seeing is in the month of April, there was a huge contraction in the activity. And if you looked and read today's news, the PMI for services collapsed at 5. It was at 49 points on the index numbers the previous month, that is in March. In April, it collapsed to 5. Together, the PMI indicates the huge annihilation in the economic activity, and more importantly, the sentiment of how economy will shape up going forward. So what we are, assessing and estimating is in the current fiscal year, that is the fiscal 21, we are likely to see a very, very sharp and dramatic reduction in economic growth. And if I may say so, even a 5% for the fiscal 20, the numbers of which are yet to come, will show somewhere close to 4% growth, and that too because of the earlier half of the fiscal gone by. That is April 19 to September 2019 were a decent numbers of growth. On hindsight, this is relative terms, but what we saw in the last quarter, that is the Jan-March quarter, and particularly in the month of March, we saw a collapse in economic activity, which will actually force the whole GDP number to look somewhere close to 4% for the current year. As I said, the fiscal 21 will see a further deterioration because we still are grappling with the health issues. We are not even ready yet to deal with the economic impact of the health crisis. And unless and until we are able to somewhat contain the rapid spread of this disease, the lockdown phasing out will be slow in phases, and at best we can see by end of May we could see some bit of activity coming back on board. But having said, the first quarter is going to be a complete washout. And when do I say washout, that means the factories will not run at full capacities, except maybe pharma and except maybe food, but most of the manufacturing activity will at best work between 20 to 40% of capacity utilization. You don't need to produce if it is not going to be consumed, and it's not going to be consumed because there is no way the markets are going to be open, the shops are going to be allowed to remain open, and as a result of which the factories are going to be on a very, very subdued note to produce. Likewise for services, and the most obvious services that have been hit the hardest are the aviation and the hotel and hospitality industry. We are not going to see these two sectors recover in any time in hurry. And in the recent times, in the recent years, we had seen with the aspiration of average Indian consumer running high, we had seen a huge growth both in aviation and the hotel and transport and other industries. These two industries are not likely to recover even over the next 12 to 18 months. That is my estimate, at least. What we are therefore seeing is the fiscal 21 will see a support coming only from two areas. One is agriculture. Agriculture, because the winter crop has seen a huge harvest, and that is a bumper crop. So farming activity in terms of harvesting, in terms of reaching the food grains to the godowns and therefore to the end consumer markets will remain in good shape. And also the second sector is the government services. Government services will need to, because at a time when private sector is not spending too much, it is the government that has to spend a lot of money. And that is where the economic activity will be hinging and being dependent only on agriculture and government to take India to some kind of momentum in the second half of this year, which is starting October. Between now and October, we are most likely, in my estimate, going to record a huge negative growth in terms of the GDP, the industrial production, all of it. The first quarter is going to be a significant washout. The second quarter also, because as I said, we have a problem of labor availability. The labor that has gone back to its home, gone back to its villages, is unlikely to return to the cities in a hurry for the hardships that they have faced. And the hardships have not just been financial or absence of income kind of hardships. There have been hardships of lack of food, lack of inability to go to any place, lack of health facilities. All of it has pushed the labor to go out from the cities and to their homes. And with that kind of traumatic experience that they have undergone, it's unlikely that labor will return to the cities anytime in a hurry. In my opinion, not in the first half of the current fiscal year, because if agriculture is set to do better, they may just get tempted to stay back in that comfort of the rural economy or wherever the smaller towns they come from, and they may not get baited enough to come back to the urban cities to participate in the manufacturing process. So that is the reason we see that overall India's growth is likely to contract and post a negative growth for the year, and that's going to be after maybe 90s that we saw, pre the 1991, we saw a crisis kind of situation in growth terms. And that is where we saw a negative growth. Why do we harp so much about negative growth? Why? Because, there are going to be lesser levers and growth impulses to allow the Indians to earn money, earn income. And for all of us, citizens included, you and me, will have to worry about where our incomes are going to be generated till such time we have the central government earning revenues we have some comfort that government will be able to spend. But if there is no manufacturing, government's revenue earning capacity through tax revenues will dwindle. You and I are not going to earn much income, many increments and so on, to be able to file those income tax, or corporate entities will not earn those profits to pay the corporation tax, or for that matter, we are not going to import that much. So the customs duties, except for pharma and maybe oil at reduced prices. So basically, the point I'm trying to come to is the government revenues will also shrink. Their expenditures are going to be high. They have to spend on health. They have to plug in the gaps where the private sector is now remaining absent, as a result of which government finances are going to some extent get taxed. But for that, they will have to basically request the central bank to allow what we call monetization of deficit, which is a technical term. It basically implies that when there is a gap in expenditure and revenue of the government, that gap is being filled by RBI printing more money. There is a debate that should RBI go ahead and print a lot of money. RBI can, subscribe to government's bonds and therefore give money in the secondary market, or it can just automatically, through what we had pre-1995, 97 era, is actually whatever the gap, RBI will just supply money to the government at a minimal interest rate around, say, 4 or 5%. And that is where the government will have the ability to spend on the economy. So we have issues of the macroeconomic stability. It's not just that growth is going to suffer, but growth will also bring along with it problems for the economy in terms of ability to save, to consume, and therefore the government's finances coming under pressure to an extent. RBI would need to print money. Would government be able to, discipline its finances? So what until pre-COVID times we had was the external sector was looking comfortable. The government finances were under stretch, but they could look under managed, could look well managed if there was enforcement. But at this point in time, like globally, most of the central banks have put all of that caution behind and are busy printing money or augmenting the non-private sphere of economic activity so as to help their citizens at least earn some income, earn some benefits, and so on. For India, the problem is double-edged because we have a large part of rural population which survives on basic income. And that is why the first round of fiscal stimulus that you saw of the government was to give, some financial kind of support to the rural poor population. But at the end of it, it can only be termed as a token support because it was less than 1% of GDP. And what India really needs is not just 1 or 2 lakhs in terms of 1 or 2 lakh crores, but Indian government today needs to spend anything around 10 lakh crores across the economy between the central government and the state governments so as to allow some kind of survival mechanism for Indian population to look through these difficult times. So there are going to be hardships along the way over the next, I would say, 12 months or so at least, till we have some normalcy returning, till the government allows, economic activity to pick up. The first date as of end of third lockdown is somewhere around 17th of May, as Himanshu was saying, that we will continue to maintain the social distancing, the hygiene, the health conditions, building immunity. All of these will become primary principles of survival and safeguarding your health. And that is going to be the new normal. Economic activity will need to pick up. The manufacturing setup will need to create in what we call is, hygienic conditions or safe conditions for the workers to work with, in terms of social distancing, in terms of sanitizing their work condition, environment, and so on. So all of it will involve costs. It will be a slow process of recovery, but the short point would be that these 12 months will still be a phase of tackling COVID, tackling the conditions, the macroeconomic fallout because of the COVID conditions still prevailing in the economy. When I talk of reboot and reset, what is the manufacturing and services sector going to look like? Or what is the economy going to look like? Is it that we will need to now look at some of the industries completely fashioning a new business model? And that, to me, is the key driving force for today, is that how the businesses are going to plan their activities. Would it be increased number of shifts with fewer working hours, staggered for the labor force, fewer number of hours at a given point in time, work for 24/7, and therefore, have some kind of social distancing getting enabled? Are we going to see some kind of a centralized process in terms of consumption? Each consumer goes to a market and puts in an order online, and technology is going to come and emerge as the biggest tool to help this and support the social distancing cause. And technology platform is going to get harnessed, not just for the routine activities, but practically for everything, right from sourcing food from farms to the ultimate consumer, as we have begun to see, but also in terms of production activities. So what we are going to see is a change in lifestyle, a change in the economic behavior of individuals. And that's where most of the India's corporate sector is now busy. Is first is planning a business model, which is for the time from now to another 12 to 18 months, and beyond 18 months, how the lifestyle changes are going to help refashion and redesign the business model, because life is not going to remain the same. The way we conduct ourselves is not going to remain the same. And that is what will, prompt the business models to get set in. The second aspect is the financial aspect. One is, we all have been saving for a rainy day. Now, unfortunately, with the huge risk-like environment in the financial sector, what we are seeing is some risk emanating in the financial sector also. And that kind of a financial risk is prompting us to become more cautious about our consumption patterns, more cautious about the kind of assets that we save into. A little bit of bad news, and that prompts you to review and ask yourself, is this financial asset safe enough for me to put my hard-earned savings into it? Probably not. And that manifestation is now culminating and showing into people going back to good old bank deposits. People are actually beginning to save their money, not in the most sophisticated financial assets, but in the recent data that RBI has put out of the last week. We have seen a huge number of time deposits growing at a phenomenal quantum. And that is the kind of a behavioral change I'm talking about. So the change is not going to come just amongst the producers, the entrepreneurs, of how they create new business models, but it is also going to come in ordinary citizens, individuals, and how do they save their money? How do they consume? Obviously, the discretionary spending, as we call it, is going to be on a downside. People are going to examine and really prioritize their choices. Do I really need to spend money on buying 4 air conditioners? Probably not. I'm going to make do with just 1 air conditioner. I'm going to focus focus and save money for a rainy day. I would therefore switch my spending to essentials for health, for insurance, health insurance, and I'm not going to indulge in excesses. And that is what the whole consumption design is also set to change. And with the consumption design set to change, as a corollary, we are also therefore going to see a huge change in the way Indian economy looks pre-COVID to post-COVID. And therefore, what we are currently seeing is a rebooting of the economy is under process, where the current processes are undergoing a change. But more importantly, all the individuals are in the process of resetting their lifestyle, resetting their conduct in terms of the working hours. Work from home, for instance, has become so convenient. We are going to see a commercial real estate, for instance, not a great idea to invest into. Why is it so? Because a company like a TCS is looking to prompt its 70% of workforce to work from home. So why do you need to, for a company like TCS, why does it need to buy huge commercial space to locate its engineers and software personnel? So all of these are going to see a kind of a prioritization in the economy. Technology, pharma, these are the companies which are going to be at the forefront, because with social distancing become a new norm, a new way of living is definitely going to prompt online conduct of activities, more centerpiece of our living, and that would be possible only because of the way the tech platforms get geared towards catering to individuals' day-to-day needs, right from food to medicines, to even other services. And that is the reason we believe that India is about to reset itself in terms of its growth model. It's not just India. A lot of Asian economies, a lot of developed markets are all reviewing and rethinking as to where the next growth engines will be. Asian economies, which used to so depend and rely on exports, will now begin to refashion their export-led growth model. They will want to put in place, facilities somewhere closer home, which will allow them to get into something, what we call it as import substitution. India is going into import substitution, for instance, as you recently saw. Many of the firms are trying to produce onshore what they otherwise would have imported from elsewhere. So the global trade order is going to change, with anguish and angst against China, as is has been on the rise. A lot of companies are reviewing their production facilities to move out from China to India, and that's where we are, in a way, going to gain. But more important is at what stage of time that we will be ready to see this to fruition. That is a critical one. That would be possible only when we have some kind of decline in the COVID curve. The slope of the COVID curve begins to decline. That is the time when government will have a small degree of confidence to open up our economy a little bit more. Logistics is something which has remained a challenge. India will need to work its way through improving the logistic model as to how they're going to transport goods in some bit of equipment from places of manufacture to the places of consumption. So to put all of it in a nutshell, I think while we are still in the midst of tackling COVID, a post COVID-19 India still looks a little bit at a distance, maybe a year away, but it would serve us well if we start thinking along these lines, that what is set to change right now over the next 6 to 12 months, and what is set to change beyond 12 to 18 months, probably a way of life. Probably we are going to be less indulgent, fall for fewer of excesses, become more prudent in our choices, become more, I would say, conservative in our expenses. I think all of this probably is going to be a process of introspection, not just at individual level, but even at the level of a broader platform, namely the governments, not just in India, across the globe. So I promise actually the next time I come, there would be some slides in the offing where we go through a more structured presentation where I could, take you through some of the critical numbers that we see in terms of growth, in terms of inflation, trade, and so on, just to take you through the quick summary of numbers that I believe we are going to see a negative growth for India for the current year at -1%. We're going to see inflation close to about 3.5% to 4%, well within a limit of RBI's trajectory, and that would imply that the Reserve Bank of India will be willing to cut rates further by another 50 to 100 basis points because inflation is low. So lower interest rates, as and when the industry prepares to pick up activity, will come in as a positive support because they will borrow at a lower cost, and that would allow some impetus for growing the economic activity. So interest rates are set to get lower by another 50 to 100 basis points. Our external sector, to a large extent, remains relatively protected. Of course, we will have to now watch out for what the remittances will be. Remittances from the oil exporting economies of the Indian workers and Indian white and blue collared people who used to send money for consumption. Those remittances are likely to come off. Remember, oil has come down to $25 to $30 a range, and that is going to depress the incomes, to which in turn will depress the remittances. But otherwise, we are likely to see lesser of oil import bill, which would actually help India contain its trade deficit. That is, we are going to import less as compared to our exports, and that will allow our dollar preservation. Currently, we are still at about $440 billion of forex reserves. It is an ammunition. So external sector will be, in a way, a kind of a confidence boosting in terms of adequacy of reserves, in terms of lower current account deficit. And all of this will start helping Indian economy to revive and recover at the time when the lockdown gets completely phased and an ordinary Indian citizen has learned his or her way of new living, which is social distancing, building your own immunity, and maintaining hygiene levels. I think all of it is going to be a way of life. With this, I would like to conclude my talk, and I'll be happy to take any questions if there are at this juncture. Thanks, Usha. Thanks, Himanshu.
Thanks a lot, madam. The session is open for question answer. Mansi, madam.
Yeah. Hello, ma'am. Can you hear me, sir?
Yeah, I can hear you too.
We can hear you.
Thank you, ma'am. From your talk, it is very, very clear that the impact definitely is all pervasive. And it's not only a very short-term impact, but it's going to remain with us for quite a long period of time. The question that has come is from Aniket Mokashi. He has many questions in one question.
Okay.
Should I ask?
Yes, go ahead.
How badly will MSMEs will be affected? And will the post-pandemic time see a lot of MSMEs shut down? First question. He also has a question, what sort of unemployment crisis are we looking at?
Yeah.
Then,
absolutely.
Okay. Should I go ahead, or I'll tell the next question later once
No,
you
madam,
answer?
let her answer.
Okay.
Okay, so very quickly, MSME is the biggest part of the manufacturing sector. We see almost 30% of our output coming out of MSME sector for the manufacturing. We see labor force participation from MSMEs at huge number. So clearly, when I speak of manufacturing, MSMEs is the biggest bane. And to your question of, because there are working capital gaps that MSMEs are grappling with, they are not getting paid in a timely fashion. And it's not just the private sector which is not able to pay, but more importantly, the government is not able to pay back the MSME sector for all its dues. And the number is huge. Recently, the minister did not elaborate on the specific number, but he said the number of MSMEs that the government owes it is huge. The quantum is huge, and therefore MSMEs are worst impacted. And if I was to speak of the mortality rate of the MSME units, the risk is very huge unless and until the government comes with a significant package of for MSMEs. There is a talk of about 3 lakh crore package on anvil coming specifically for MSMEs. It would allow that huge segment of the manufacturing sector to avail of working capital needs. If that gets done in a timely fashion, the mortality rate or the risk of shutdowns will reduce for MSMEs. But the more important part is the timing. It needs to come within a very, very short span, within a week or so. Anything beyond a week or 10 days would perhaps be too late. So it's extremely critical to see that MSMEs get that government relief program exclusively designed for them, so that their working capital requirements are met with and they can conduct at least the ongoing business operations. Let's not forget MSMEs are also exposed to exports, and 40% of those are coming from MSMEs. And unless and until India does well in managing some of its exports, export products have changed. The basket of exports has changed. So MSMEs can quickly maybe gear up to manufacture masks, for instance, reusable masks, which they've been doing. All those kind of, or even in pharma chains, there have been significant number of MSMEs. So unless and until we have a quick reset for MSMEs, there is a risk, and it's absolutely imperative for the government to kickstart that fund, which will, allow the survival of those. Coming to your employment question, it's the biggest problem. As I said, a lot of them are migrant workers, daily wage earners. And at this point, unemployment stands at a staggering 27%. Unless and until we see normalcy return, that's going to be rising even further over the next couple of months. And I fear that a large part of unemployment issue will also render the ability to spend get compromised. And that is the reason why industry is looking at a very, very slow process of recovery. That is also the reason why industry is looking at only 20 to 40% of capacity utilization. Because if there is no end use demand, who are they producing for? And that is going to be a big problem. It's a chicken and egg, or it's a negative feedback loop. Unless and until you provide for MSMEs, you provide for workers, their earning capacity is going to reduce. If their earning capacity reduces, their spending capacity reduces. If spending capacity reduces, manufacturing automatically will have less of incentive to produce. And that is therefore one government money has to break that negative loop. And it's imperative, as I said, for government to spend as much as at least 3% of its up to GDP on the economy, and that would tantamount somewhere between 5 to 7 lakh crores at least to start with.
Thank you, ma'am. The another question after this is: will India see an increased foreign investment if other countries stop investing in the Chinese market? And related with that, would the Indian market be a good option for foreign investment? And will that reduce the domestic unemployment problem?
Yeah, definitely. I think foreign direct investment is something that the government is very actively looking out for. What I believe and what I read on the government websites recently over the last couple of days is government is making land available to the size of almost Luxembourg, available to the factory facilities which are moving out of China and are looking elsewhere. But it is very, very critical that it's not just land. You have to make sure that ease of doing business is further is further relaxed and improved upon, in terms of the regulatory approvals and the systems and processes. They need to be cleared very quickly, because else we have a risk of those facilities moving out or looking beyond India to, say, countries like Vietnam. What one gathers is, because of some of the delays that India is presenting in terms of procedural delays and bureaucratic hurdles, some of these companies have already opted for Vietnam to set up their manufacturing bases. There also the labor is cheap. So we are going to see some competition there. So critical factor would be, yes, India has the huge potential to attract foreign direct investment, and it's not just land. I think it's all of the procedural and bureaucratic processes that need to be cleared very quickly, so that they have foreign direct investment coming into India. And as soon as you have a foreign direct investment, it creates employment opportunities, because it's an equity investment, it is a primary investment, and that any day is going to be preferred for India, and it's more of a permanent nature. So India stands to gain potentially, but we need to have more of hard work on that front.
Thank you, ma'am. Then we have a question from two of our participants, almost similar question. Shivanand Prajapati and Professor Veena Puradkar. They are asking how education system will get affected post-COVID.
Yeah, I think that's a very good question. And that is where I believe that are we going to look at technology as the new engine for disseminating education? Are we going to see a different model as far as education, maybe at not just secondary school level, but even at professional and vocational level? And I believe that the education system is set to review the way in which it disseminates education. Online form of education may become one of the emerging facets of education. I do still believe that it cannot completely and quickly replace, the kind of model that we currently have of physical presence of students in the classrooms. Maybe, as I said, we could see more number of teachers working different set of hours with the social distancing kind of a thing, getting fashioned. It has to be an out-of-box thinking, even for every sphere of economic activity. Maybe like manufacturing, are we going to have longer, duration of college hours? Are we going to see, morning 7 to evening 9 p.m. kind of a college hours with different staggering of classrooms, number of students, getting distributed over the day? I think these are the kind of things people may see. At least, it's an evolution that we are likely to witness in all of the activities. Education is a relatively easier one to migrate to the online platform. But as I said, it cannot replace completely the physical kind of aspect of it. And that is something that we all have to ponder over, as to how do we design the education system once again.
Thank you, ma'am. Then we have a freelancer from entertainment industry, Mr. Yash Surve. He's asking, have set up everything virtual on social media platforms. So how entrepreneurs like him must plan about post-COVID period?
So if I understand correctly, he's in entertainment business.
Yes, yes.
Okay, so I think OTT is the way forward is what we are seeing. I mean, we have seen as good as, I mean, right from the biggest entertainment source, which is films, are now looking to have online releases of the films. And how do I see is obviously, the revenue model will have to be foreseen. They'll have to obviously tie up with, the service providers, with online kind of structures to be designed in terms of advertising revenues. How are the costs? I do believe that maybe it will have a knock-on impact in terms of some of the employment opportunities. You may not need those many participants or employees in creating an output in the media and entertainment sector if you migrate to online. But having said, I think the way one would have to look at in terms of cost, I think costs may likely get contained to an extent, but the distribution platform is something which will have to completely undergo a change, at least at such time. As I said, we may get more of personal theaters. We may have housing societies, every housing society building a personal theater catering to fewer number of people instead of multiplexes and so on. So distribution model will also change. It's not just online. We could see, as I said, in education, it's difficult to imagine a complete replacement of the existing models through a technology dispensation, but definitely with social distancing becoming a way of life, at least until the cure comes in sight, we are going to see some change in the way all of the economic activities operate, media entertainment particularly, because all these are more and media entertainment, and including sports for that matter, these are all inherently concentrated with physical presence and proximity, and these are going to see a whirlwind change in the behavior and the models.
Thank you, ma'am. Next question is from Dr. Medha Tapiewala. She is asking, do you feel that India can get the economic benefit of the world's anger towards China?
Yes, as I earlier said, I mean, we are looking at India has remained relatively competitive in terms of relatively cheap labor force, and that, along with the ability of service orientation of India's economy, should be able to attract foreign direct investment. And yes, the angst and anger towards China has been rising, led by US. And some parts of Europe. So we will see some shift in preference from China. Of course, China had built up such huge scales in terms of production capacities for all of the other competing economies to build that scale, therefore will become a prerequisite. It also, one point perhaps I had not touched upon is, the supply chain model has undergone a change too. For instance, if I talk of supply chains, a Boeing aircraft getting produced in the US, in Seattle, manufactures only a small part. Fuselage is only the one that is produced onshore in US. Rest all other parts of the aircraft are imported. And that is what we mean by supply chain. Doors and seats are imported from, say, China or other European nations, or even countries like India. Now, that supply chain was set to break because of the world trade order getting seriously hampered and disrupted. So, any country which needs to source their raw material and inputs will look at diversifying those sources of raw material input. No longer a country is going to depend only on economy, say China. If China was the only provider of one input, what the new order may prompt is, along with China, they will have at least 4 other countries that can produce identical inputs, with specifications given by the host country to produce. So there is a diversification of sourcing of inputs and raw material, and supply chain model is also going to change. And that is where coming back to India as an attractive investment destination once again comes to fore, that India can be a very, very meaningful player in the supply chain as one of the diversified destinations.
I feel that is a very optimistic picture that we have, especially during this area of little pessimistic things happening around. Ma'am, next question is from Dr. Dhanashree Samant. She's asking about the tourism sector. She's asking how the government will assure tourism sector development post-pandemic.
I think first is, when I talk of normalcy returning post-pandemic, you have already seen aviation industry trying to set up new designs. For instance, very recently, GMR put out a new design of its airport with social distancing in mind as to how it's going to cater to the passengers, aviation passengers at the airports. Likewise, say aviation industry, Vistara, for instance, airline. Vistara airline has shared its model of how it's going to plan its seats in the aircraft, how they are going to cater to the flyers in terms of no touch services. Food will not be there, for instance, or anything that pertains to a touch point will be done away with. So obviously, it's not that it's going to be a death of an industry. People still need to commute, right? Road transport and rail transport is not going to completely replace, because time is of essence here. So all of it, when I said all economic activities will need to fashion themselves differently, tourism, which requires aviation and other modes of transport, will also undergo similar change. What do I mean by that? You will have tours and travels with more exclusivity. You will have more hygienic conditions becoming the basic norm of where you travel, how you travel, what you go to see. For India, the challenge is it always depended on the volumes game. It's like ek bus mein 50 logon ko thuso and take them around. Here, how are you going to design those buses? How are you going to design those transportation vehicles? That is going to be important. That is going to be remodeled. So, for instance, trains also are going to see allocation of seats and berths at social distance, at keeping distance in mind. Likewise with the buses, likewise with the aircraft. The way we conduct business. So what I'm trying to say is that is the reason I said there are some of these industries which will take a long time to recover. It's not like switch on and switch off like a manufacturing. If they've produced hygiene conditions, workers can come back. No, some of these services inherently, which are inherently crowd intense, will need to bring in the social distancing principle into their business models, and they will need to change. Different working hours, whatever it is, longer duration of working hours, shifts will become maybe, in my opinion, a norm of the day, not just for manufacturing, but even for services. You may see us, courier dropping off a package at your house, maybe at 2 in the morning. That is because that's what you want to keep the flow and the volume of business at a better distributed level. And that's what I feel is tourism is one such example, where you will see all of these changes over a period of time, not very quickly though.
Professor Jitendra Jha has a question. Does India have the ability and resources to upgrade the entire logistics to compel foreign companies to come to India, especially the manufacturing ones?
Oh, definitely. I think, we do have a serious potential of completely revamping and improving upon. When I say revamping, there are some last mile connectivities which need to get improved upon, but road transportation or even the rail transportation, for instance, has already begun to respond to the COVID changes, COVID prompted changes. And I would think that the sooner we modernize the logistics space, quicker would be the ability to attract foreign capital. And it's not just, logistic firms globally would want to come into India, because let's not forget, India is a huge market of 1.3 billion people. And if we have a safe and hygienic mode of logistic model, then definitely, India still becomes an attractive proposition. So the facilitation will need to be done by the government, both in terms of roads, rail, and even aviation cargo for that matter.
Sangeeta Singh, one of our participants, she is asking, can the startups help in improving Indian economy?
Well, startups have already played a role in, getting India to be an attractive startup hub global for a global economy. I think tech has been, of course, the foremost space as far as startups are concerned. I think, startups will definitely, because why I'm emphasizing on startups is it also augments the everyone becomes an entrepreneur. He or she also will attract more and more labor, more and more workers. So I think it also becomes a source of employment, and startups can definitely be the new engine of growth, not just around the technology, but elsewhere also, in other spheres of economic activity, I mean. So startups have been actually playing a role. It's no two ways about it.
Okay.
And they attract private equity also. They attract all the global funds as well.
Ma'am, there is one more question. Actually, partly you have answered it before, but I would like to mention that here. One of our participants, Vimal Shah, has a question. Do you anticipate any reduction in taxation? And if yes, how will the government balance the deficit?
I don't anticipate any reduction in taxation, no, because I think at this point in time, the government's effort is to maximize its tax revenue wherever possible. And you saw it happen last night. Government raised the excise duty on diesel and petrol. Of course, it's not going to come to the retail end of consumer. The burden is going to fall on the OMCs, the oil marketing companies. And what basically would happen is a profit that OMCs are earning because of the dramatic price decline in oil, they would have earned supernormal profits, and they would have given dividends to the government end of the year. What government is doing is front loading the earning of those oil market companies, and therefore the burden of that will go to oil marketing companies, but the revenue will get generated for the government. Now, mind you, the oil prices have been globally declining by a rapid pace over the last few months. I mean, we saw 60, 65 come down to as low as below 20. And we are likely to see a $25 to $30 a barrel in the near term, in a foreseeable near term. And that means prices have halved. But if you track the domestic prices, they've not halved. They have actually, risen. And that is one of the most, I would say, the golden goose for government to earn revenue. And this revenue is shared, mind you, by the central government and state governments. And that is the reason you will not find any state government, complaining about retail prices going up, or rather oil prices having moved up. Yes, a few days ago, I think Telangana or Andhra Pradesh, one of the states, and Delhi raised the VAT, the value-added tax on the sold petrol and diesel prices. I think to preempt some of the state revenue into the central government's kitty, the central government announced a huge hike in excise today, last night rather. So I would think that revenues will be extremely critical, and given that kind of compulsion, it's unlikely that tax rates would be reduced. Highly unlikely. In fact, they may impose some cess.
We have a question from Professor Devashri. She's asking how the role of banks is going to change in the near future. And related with that, another question that she has is, what is the biggest challenge for the banks post-COVID?
I think the biggest challenge for banks is the risk that lies in their loan books and even in their investment portfolio for that matter, because you don't know where the defaults are coming from. Given the kind of risk aversion and given the kind of corporates' inability to earn revenues, their ability to pay the principal and the interest to the banks therefore becomes risky. And to that extent, the assets may be declared as non-performing assets. When an asset is declared as non-performing asset, the banks have to provide for, they have to make a provision, and that erodes their profitability. So banks obviously are going to be highly selective and on a broader basis risk averse in extending loans, and there is going to be a challenge in earning interest margins, because let's not forget the liquidity is huge in the market because RBI has been augmenting liquidity. So the deposits, the cost of deposits will be low in terms of, most of the banks have lowered the deposit rates. But unfortunately, what has happened is the banks have not been able to dispense credit at a higher rate because a lot of their lending rates have also got adjusted to the lower repo rate now, which stands at 4.4. And as a result of which, their interest earning capacity has not increased. It has actually shrunk because the volumes of credit have shrunk because of risk aversion. So banks definitely will not be able to post, or rather, there is a risk of banks, remaining risk averse for a slightly longer duration unless the government extends a set of facilitation of bank guarantees. That is, the bank guarantees would be given for MSME loans and so on the front of moratorium, which was announced incidentally on 27th March by the Reserve Bank of India, that any loan that becomes bad between, say, March end and May or June will not be declared as a bad asset. So that is moratorium. It's a freezing the asset quality labeling, as it is called. So it may have some kind of a forbearance, but it needs to be seen that how long can RBI extend that forbearance, because economic activity is not picked up. So banks, in general, their risk averseness will continue to remain. And if a bank is risk averse, their earning capacity reduces. And to that extent, a very well capitalized bank stands a far better chance to be able to, garner more of equity capital to shore up their basic capital, tier 1 capital, and to some extent tier 2 capital also, to provide for any undue risk that emanates on their balance sheet. So I think it's important to note that banks also will take a little bit longer to get back to a credit growth of, say, 10, 12, 14%. I think we are currently seeing a 7% growth. That is unlikely to improve very dramatically in the first half for sure.
Ma'am, the next question is from Mr. Durgesh Fondekar. He's asking, the next question is from Mr. Durgesh Fondekar. He's asking, what will be the impact of migration of labor on MSMEs?
I think it would not just be MSMEs, it would be for the entire manufacturing space. Migration of labor implies non-availability of labor. Even if I try to source the local available labor, my challenge would be to skill them and reskill them. Okay, because the labor that I had, which has migrated, had a particular skill set. He or she was trained to conduct certain kind of operations in my manufacturing facility. But if that person has moved on and gone back to home, what I could then look for is replacement with a local labor force. Now, that local labor force may not necessarily have the required skill set that I need for my manufacturing activity. So I will need to spend more not just in terms of money, but even in terms of time to skill that locally available labor force. And that is going to delay the recovery process for industry, not just the MSME, but the entire industry. So the issue prevails for all industries, be it micro, be it small or medium enterprises. The migrant labor issue is going to delay the recovery process, at least in my opinion, until the second half of the fiscal year. That is not before October, December quarter that we'll see labor force participation getting better in the meaningful manner.
Ma'am, next question is from Dr. Amit Valmiki. It is more from the philosophical angle. She's asking, are the oppressed marginalized from every sphere, be caste, class, religion, any, gain in vitality after the pandemic? And there will be definitely moral paradigm shift, but would it be a positive one or a negative one?
I'm hoping that the experience of COVID-19, which is a life-changing experience, makes everyone, and I'm answering also philosophically here, makes everyone a better human being and a better person. We have become slightly better than an average day, become more sensitive, become more sympathetic about the hardships of people who are at a lower strata. People who are less well off than us, people who are struggling right across the chain, right from the worst affected to people affected, more than you have been. And that has prompted all of us to introspect as to, how much do we need? Do we need to get into philanthropy a bit more than we have been as an Indian society? I do not see Indian society as philanthropic as Western world, for instance. There may be, I'm not saying it's absent, but we can do better. The problem is we do not have a very systematic, organized way of philanthropy platforms, barring, huge corporates which run some of those trusts. And first and foremost that comes to your mind is Tata Trust, and trusts run by, say, Mahindras and so on and so forth. But I think at individual level, I think we would be a better class of citizens, more responsive to the hardships of the people, more sensitive to their requirements and needs. So I just hope that this lockdown has prompted us to do a lot of thinking, and I keep my fingers crossed, honestly, that as soon as the lockdown is over, we don't go back to our old, earlier selves of, being less considerate individuals. I may be very much generalizing here at risk of angering some people, but as a class, as an Indian society, I think some of these, in a materialistic race, we have begun to somewhere shed some of our core values. And I hope that those core values get reinstated amongst us, and we don't go back to the earlier normal as soon as the lockdown is over. I hope this new normal of ourselves stays with us. India will be a better society for sure.
Thank you, ma'am. Again, for a very positive picture. That's somewhere psychological relief during this period.
Yeah, I hope so too.
Yeah. We have a question from Professor Pranali. She's asking, in the current scenario where most of the leading countries are in the process of cutting down their interest rate to zero, India has also been consistently cutting repo rate. Could India afford to have interest rates near zero level like Western economies? And whether could it be sustainable from inflation point of view?
At the outset, India is unlikely to have a zero interest rate kind of a regime. And why is it so is, we have to distinguish between developed and Western world as versus India. Developed world have something called a social security net, That is, they file for jobless claims and they get basic income for survival. Okay. And unless and until you have a basic income for survival, you and I are living in India are always looking to earn an income and to save, to earn an interest on those savings, and therefore augment our revenues to the extent possible. With huge population of India, still remaining in below poverty line, a zero interest rate seems an impossibility at current stage. Unless and until we have something like a universal basic income, okay, we are not likely to see that. That is as far as the humanitarian aspect is concerned. On the macroeconomic aspect, I think let's not forget that the world over, the developed world, they're struggling, and I use the word struggling, to get inflation up. Okay, here in developing markets, including India, our effort is to contain inflation. Our effort is to restrict inflationary pressures between 4 and 6%. So the whole dynamic is different, because unless and until you have inflation under management, and that happens towards near full employment economy, okay, when everyone who looks to participate in labor force gets a job. Okay, in India, that is not the case. We still have a huge supply of labor, and demand is relatively lower. So we do have unemployment issues. And with that kind of macroeconomic framework, I would think that we are seriously far off from a full employment kind of a near full employment kind of a scenario. Inflation is bound to exist in India. Supply demand mismatches will continue in India, and as a result of which, unless and until we see inflation coming off to zero, we will not see interest rates or negative for that matter for extended period of time. We will not see interest rate scenario anywhere looking like what the developed central banks are pushing it through for.
And the next question is very interesting and also quite where the lots of posts are going on WhatsApp about this.
Mm-hmm.
The question is from one of the participants, Rushali Gupte. She's asking, given that excise duty on alcohol is the third largest source of state tax revenue, how far is it profitable at the cost of the people's health? And she's also saying that it is putting all norms at stake.
Yes, definitely. That's a very difficult reality that the government has, that, items like a cigarette or alcohol, which are more of a manifestation of habit, and they're harmful for health. And that is why the tax rates on those are huge. And that is where the government earns revenue from. But that does not mean that government is encouraging by raising taxes on these items, and thereby by raising costs on prices. The government is using price mechanism to dissuade the consumption. But we all know there are certain set of habits which it's a free society, it's a free world. I'm not yet in a totalitarian world where I say, no, you can't consume a bottle of beer or a glass of wine. To each their own, moderation is the key. And if the government is able to earn revenue on some of these kind of vices, and under their role, they're dissuading these vices by raising the tax rates and costs by a huge margin. No harm, I would say. It is to each their own. I think people will have to look at an individual level as to how much do they consume in terms of alcohol and how much do they smoke. But yes, that problem does persist for the uneducated lower strata of society, which has undergone a huge stress. And I was, on a lighter note, I was looking at some WhatsApp snippet as to one guy who had such a pent-up demand locked into him after 45 days of lockdown that he went ballistic in saying that I want to consume X amount of liquor and I want to have X amount of food. But yes, that is a problem. We have to weigh it. And I think that is also the reason the government revoked the opening up of the liquor shops, because social distancing was not getting maintained. Quantity of consumption was not getting regulated, and that was, of course, one of the key reasons. The government will have to review and relook as phased opening up of these kind of items of consumption.
Okay. Ma'am, the next question, two questions I'm taking, they are related with the educational system. One question is from Dr. Kumudini Ahir. She's asking, what will be the scenario of private educational institutions providing graduation degree under any university banner or being autonomous?
I don't think the situation pre and post COVID should be any dramatically different for private institutions. At least I'm thinking on my feet here. I do not foresee a very dramatic change in terms of anything very specific happening to the private institutions vis-a-vis the government-run educational institutions with government aid and so on. I think the norms are going to be similarly evolving as the way it will for the rest of the educational institutions. So I'm not able to point any shift in behavior in which the private educational institutions could get prompted to change post-COVID. I'm sorry if I'm not able to answer this, but somewhere I'm not able to see anything which would be very specific to private sector vis-a-vis government-aided education system.
So no major shift expected post-COVID immediately?
Not really. I mean, what would apply to government institutions or government-run or government-aided institutions would also apply for private. Nothing specifically very different for private institutions is what I'm trying to say.
I'm related with that. One more question is from Dr. Sunita Jadhav. She's asking, professional education, which requires hands-on training, will not be replaced by online platform. She
Absolutely.
wants your comment on this statement she has made.
No, absolutely. I mean, the best analogy that comes to me is, a flight simulator. Okay, a pilot does all kind of training, with flight simulations and etc. But at the end of the day, he or she has to go and fly an aircraft, right? So something like that will definitely be applicable, even even in these kind of activities. So unless and until I have vocational and skills getting applied in real terms on machines or on equipment or on electronic devices or whatever I'm trained for, there's no going to be any value realization, so to speak. So I may get online trained, but I need to apply it. And as I said, that will also need to get fitted into the new work environment and new work culture as to how I get interns and the vocational guys to who have recently freshly learned to come and participate on the shop floor.
The next question is about employment. That has come from Dr. Vaisakhi Datta. How will employment opportunities be affected? And she's also asking, how can common man fight the inflation? And there is one interesting question. I assume this participant must be a student. He's Mr. Vikas. He's asking, will there be any opportunities for freshers who are passing out or getting their graduation degrees this year?
Yeah, absolutely. So I'll answer the last question first. So, it is a class of 2009 and a class of 2020. I think, these are the two batches that come to mind very quickly. The placements were seriously hampered. The revenues, the salaries were seriously hampered. But the silver lining to this dark comment was that it's called as a baptism by fire, that when you are entering the workforce, you've seen the worst of it. And that becomes the most enriching experience as to how am I dealing with a serious downturn in the economy, and therefore on my employment scenario, and therefore my wage earning or income earning capacity. But from a point of low, you are only going to rise up. So as you move up, when things begin to get normalized, unless we are looking at a perpetuity of this scenario. No, we are not, none of us are looking at the perpetuity of this condition to prevail, right? So we are looking at an improving environment as maybe next 6 months, 12 months, 18 months. But beyond a certain point, all of us are eternal, inherent optimists. We're not going to see this prevailing for 5 years. So if we're going to start from a point of low at this juncture, we are definitely going to be a much more experienced person, even before we enter a full-fledged workforce. Because as a fresher, I have experienced the worst risk that comes and arises once in a century, maybe. And from there on, you only become even better as to how to tackle pressure points. So I think one needs to look at it from that prospect. Yes, you may start at a lower compensation because the paying capacity of everyone has seriously dwindled, but maybe it will be made good of as you grow up the career ladder. So freshers, don't get depressed. I would say that things will improve, and you've been tested by fire, so to speak, at word go. The earlier question was on employment, right? I'm sorry,
Yes,
I lost
the
a little
earlier
bit of the
question
time.
was on employment. The question was, how will employment opportunities be affected?
Yeah.
And how can common man fight the inflation?
Yeah. So I think employment opportunities definitely are going to get affected, because till we see our growth coming back to the normal. And when I say normal, India as it is, by the way, one thing that I don't think I mentioned is even pre-COVID, India was not in the best position as far as growth was concerned. So we were looking at starting with a position of disadvantage. Okay, with employment declining, with incomes getting compromised. So India was not at an advantageous position even before COVID. With COVID onset, this has aggravated further. Our employment opportunities are not going to improve very quickly, as I said, because we are going to look at growth getting better only maybe 2 years down the line. And when I say better, coming close to maybe 6.5% or thereabouts. That is also a tall order, I would say, over the next 3 years. So where am I going to see a normal growth rate? Maybe another 3 or 4 years later. So to that extent, we have compromised significantly on coming back to a 7% kind of a potential growth level. And if we do not have growth, obviously, employment opportunities do not obviously increase to commensurately also, unless you have a flood of foreign direct investment, which will propel India's growth. So that is one extraordinary growth engine that we need to watch out for. But as I said, for that, India's bureaucracy and policy framework has to do significantly better to be able to allow a very seamless movement from China to India for facilities to move in here. Only then the employment opportunities will start bucking the trend and look better. In terms of how does an average consumer battle inflation? Well, I think in the very near term, we are unlikely to see inflation pressures. As I said, the demand shock is so huge that no supply is going to adjust to a level where inflation remains high. As I said, food was one of the biggest risks in the very recent times, where inflation was moving up close to 6% levels. But last 3 or 4 years, we have seen inflation getting fairly managed under 5%, between 3.5% to 5%, if I were to provide a big broader band. So I don't think inflation is going to be such a big issue in the near term. It is not. There will be an upside lid to where the inflation goes. because you will see discounts and bargains and everything that you may see coming in the marketplace, not just for goods, but even for services. So I would think that if I were to forecast an inflation, at least for a year to 18 months, 12 to 18 months, I do not see a pickup in inflation. On the contrary, from the point where it started about 3-4 months ago at 6% levels, it's actually going to start getting lower because inflation is driven by food, by fuel, and by core. Which we call it core, is essentially services are included in that, or some of the manufacturing products are included in that. Now, fuel, we know, while global prices have reduced, the government is unlikely to put additional burden on the retail consumer by raising the prices for the retail prices at the retail level. I'm sorry. Food, because there's a bumper crop, we are not likely to see, supply is extremely good. So we're not likely to see a food inflation arising again. That leaves you with non-food, non-fuel inflation. And that is where I believe that core inflation, as we call it, it is going to be much lower. That is because, we still have a supply. We are seeing a huge demand undercut, or, I would say shock in a way to put it. And with that kind of a demand depletion, producers are not going to be able to raise prices. The pricing power, not the purchasing, I'm sorry, the pricing power of the manufacturers will be very weak, because when will I start raising prices? When I say कि अरे demand है तो पैसा कीमत बढ़ा, demand नहीं है तो where will I raise prices? Okay, so core inflation is also likely to come off. So I would not think inflation is going to be a problem in the near term. So we will come to that bridge when we'll cross that bridge when we come to it. But I would still believe that it's going to take us a while to get the demand on a normal footing. It's still some time away. But if inflation rises, then you will see RBI raising rates. Then you will earn more in your financial savings to some extent. That's a safety net. That is an automatic stabilizer, so to speak, in the economy. But having said, I think I would worry less on inflation. I would worry more on where do I earn my income from at this point.
Ma'am, the next question is about the prescription given by the Nobel laureate Dr. Abhijit Banerjee. Dr. Geeta Menezes is asking, Dr. Banerjee has offered print money pill to deal with the COVID-19 crisis, asking Indian government not to worry too much about fiscal slippages. So what is your take on this? And she's also asking, should the government be depending more to boost aggregate demand or going for pay cuts and freezing of DA of government employees?
For all the answers, it will have to be a combination of everything. I don't think there's going to be one magic bullet that's going to take care of all of these problems. So to the first question of printing money, yes, I mean, as I said during my talk, that government is staring at a serious shrinking of revenue because of the tax revenues. And on the other side, the expenditure is going to seriously accelerate because government needs to provide for a whole lot of services. And therefore, the gap, which we typically call fiscal deficit, okay, is going to widen. Now, to put it in technical terms, India was projecting to have that gap at a 3.5% of GDP. That is somewhere close to about 7 lakh crores or thereabouts. I'll come to the exact number. But having said so, the gap is going to increase even significantly because all the sources of revenue are drying up, including disinvestment. Government was planning to offload some of the government ownership in some of the stake in government-owned entities to the market. And that is unlikely to happen given the kind of risk appetite that prevails amongst the private entities or financial institutions, or domestic or global, all put together. So the sources of revenue are, as I said, dwindling every time. Every sequential month till the lockdown continues, and expenditure is rising. Fiscal deficit, therefore, is likely to be more close to about 6 to 7% of GDP. And if 1.7 lakh is close to 1%, you know that what it is. It's going to be additional to 3%, so that is going to be 7 lakhs. So what is going to be the source of financing that kind of gap in revenue and expenditure? Obviously, as I said, just to make you understand, the fiscal deficit is financed by government borrowing and small savings. Now, at a time when incomes are shrinking, you and I will have lesser of availability of money to save in, say, PPFs and all the saving instruments which go into government financing of deficit. So that leaves you with higher government borrowing. Now, where does the government borrow from? It would borrow from RBI entities like a bank and financial institutions, or it will borrow from Reserve Bank of India. Now, the amount that it borrows from Reserve Bank of India is called monetizing of deficit. Now, post 97, this was being done by government borrowing in the market at market rates. That means if the risk-free sovereign yield is at 6.5% for 10-year maturity, sovereign borrowing was for a 10-year cost was at 6.5 to 7%, whatever the GSEC yield is at in the market prevailing at that point in time. Now, therefore, would it be prudent for government to do its borrowing through secondary markets where the yields are at 6.5, but it would put pressure because when I borrow, I need to have those securities, the bonds in my holding position. Banks and institutions may not have that extent of bonds in my portfolio to sell to RBI for them to give me money. So what is going to happen? And when I say give me money, mean government. Okay. So in this case, the government will require RBI to print money. That means automatically, whatever is the gap between expenditure and revenue, RBI prints money. In technical term, it's called printing money, that is monetizing the deficit, and it would be at a nominal interest, at a smaller interest rate level, and that to an extent has to be the source of revenue or source of means for the government to spend, to be able to spend more. Because as I said, in the absence of private sector activity being absent, it's only the government. I'm sure many of you've read Keynes. Pump priming is the only source of growth engine at this point in time. And for that, government will need RBI support. The problem is, how much deficit is okay deficit? Because if it's a very high deficit, the rating agencies will breathe down your neck, will downgrade your economy, and therefore the global borrowing cost will significantly move up. Okay, so there is a rating perspective also as to the extent of fiscal deficit and monetization of deficit that I can do. But the need of the hour is, and the reality is that the government has to spend. So yes, the government needs to monetize. The amount that it needs to monetize has to be decided. That government can run a fiscal deficit of 3.5 is a history now. They'll have to redraw a budget, in my opinion, but can run a deficit of 8, 9, 10%, the way developed markets have done a 15 to 20% of GDP as a fiscal deficit. No, India does not have that room. India will have to look at somewhere close to maybe 5.5 to 7% kind of a band of deficit at central government level. Add to that the state governments, they are also pressured for revenues. So their deficit will also widen from 2.6 to say 4. So together we are looking at a center plus state deficit at about maybe somewhere around 10 to 11%, which is a huge quantum, okay, of GDP. And if we're looking at that, what happens is we need to have a sunset clause as to when I'm going to bring the fiscal discipline back at the end of 2 years, at the end of 3 years, or at the end of 4 years. Because once the government gets into a habit of spending, it has always been difficult for all governments to come back on their own, to come back to fiscal discipline. So therefore, while I buy the point that monetizing deficit and printing money is a source, the amount of money and the duration of coming back to fiscal discipline is a critical one that government will have to frame very carefully and cleverly, so that there is a confidence that yes, India, like all the other economies in the world, is expanding its fiscal deficit, but it is also being disciplined about how and when it wants to come back to discipline, maybe in starting with the end of 2 years and so on and so forth. So that is the question. The second part was too much of long answer, I'm sorry.
Yeah.
But what was the...
Should the government be depending more to boost aggregate demand, or going for pay cuts and freezing of DA of government employees?
Yeah, so once again, as I said, it will have to be a combination of both, because government is trying to, like every other corporate entity where a lot of corporates have laid off their people, morally not correct, but let's face it, corporates also have to run an entity. They are also answerable to their investors. When there is no production, they cannot go on and on month after month after month to pay salaries. So the cost cuts will happen. The increments will remain absent. Forget the bonuses, even the increments will not be forthcoming. If you preserve your salary, that's the biggest deal today. So obviously, cost cutting of wages becomes the most easy and first line of defense for the corporates and the government alike. Okay, so the governments, both at center and state, are also going to look at salary cuts or wage cuts in the ensuing year, which is a way you do when you don't have a visibility of earning income or sacrificing income for a fair amount of time in the year given by. So that is okay. You need to do that. As a combination, you also simultaneously have to spend to improve your aggregate demand. So when I say aggregate demand, that means you have to put money into the hands of people so that they come back with an appetite for consumption. And consumption will bring boost to manufacturing, as I explained earlier in that full loop. So what would happen is you'll have to have a combination of both to be able to balance out the problems at the source of revenue front and the problem of cost management front. So you can't just use one tool to deal with this humongous problem. You'll have to have a combination of all the tools available at your disposal, and hopefully with a right mix. That's the prescription that everyone would want to give.
Do you think we should improve our e-commerce, and what role should technology play in this? Is India capable of such conditions? It is from Sakshi Singh.
I think I've answered this question. I think I've really answered this question.
Okay, and then one question from Shubhada Rao. She's one of our participants. She's asking, will this pandemic affect the exchange rate or value of money?
Very good question. I think let's look at it. Exchange rate is a function of your domestic dynamics. That is your balance of payment, which we are sitting pretty on. We have good forex reserves. Our balance of payment is going to be comfortable because our trade gap is going to be narrowing, and foreign direct investment flows are expected to remain fairly strong. So we, on a net basis for the year, we are still looking at addition of forex reserves and not depletion of forex reserves. So say, for example, our forex reserves stand at $440 billion US dollars. We will add it to 440 billion and not go from 440 to say 410 or whatever it is, unless you have a huge intensification of a problem. At this point in time, conditions remaining where they are, not worsening very dramatically. So that one fundamental is the dollar availability. Dollar availability or dollar supply remains comfortable, which is one of the ingredients or one of the factors that go into the exchange rate mechanism or dynamics. The second is how is the real effect, the underlying real effective exchange rate. Now, that is where our inflation differential with our trading partners and us is also going to be where it was, because our inflation is going to be lower compared to what it was a few months ago. And the overseas inflation is also going to be lower. So it is, this situation is not going to get worse off or better off. We are going to remain at a similar inflation differential. The third and more important joker in the pack, so to speak, would be the value of dollar in the international market, which we call dollar index. A dollar index is computed against dollar's value against a basket of currencies, euro, yen, GBP, and so on. And these, depending on their demand supply dynamics between dollar and yen, dollar and euro, dollar and GBP, the value of dollar gets determined. Currently, because there is a global risk aversion about everything in life, dollar looks to be the safe haven, we call it, because a large part of the global economy is dollarized economy. What do I mean by that? That means our quotes for international transactions are done in dollar terms, not in rupee terms or not in any other local currency terms. Predominantly, it is a international reserve currency, as we call it. So therefore, it is perceived as a safe haven currency. Now, if dollar value continues to rise because risk gets further and further deepened, and if dollar index goes well beyond 100, it has touched in recent days 100 and beyond, but if it goes to 102, 103, then automatically rupee will depreciate. Okay, so it will get support because of comfortable dollar supply that we have because of forex reserves or the inflation differential, but because the international reserve currency has become so extremely strong on a relative scale, therefore rupee will weaken. Now, it is anybody's guess. It's an uncertain world. We at least know that we have the backstops in terms of adequate reserves. We have a cushion, rather, not backstop. We have cushion in terms of adequate reserves. We know that inflation differential is not going to widen too much. It would still prompt a depreciating value of rupee to a dollar, but not, going from current 75, 76 band levels to 90, 85, 90 levels. Nothing of a dramatic sort. So exchange rate is a combination of all of these put together, and therefore I would think that it would still move in a narrow range between 75 to 77 kind of a range, unless the caveat always for exchange rate is very unforeseen, because financial markets are hugely volatile compared to the real economy. Real economy remains volatile, but financial markets have a complete different degree of volatility, given the kind of a risk environment that we have today. So as a result of which, if I were to look at exchange rate dynamics, I would be cognizant and be watchful of these three factors, which are: how is the dollar index moving? How is my trade deficit and current account and balance of payment shaping up? And the third would be what is the the real effective exchange rate, which is measured through inflation differential, shaping up in terms of its trajectory. It is definitely going to depreciate the currency, but not by a huge margin, is what our conjecture would be.
Suchita madam?
Yes, sir.
Yeah, we take now, the house takes two more questions only now. Yeah, last two questions.
Just a moment, sir. I'll take the questions. The question asked is, what will the impact on labor-oriented industries?
I think I've answered this.
I think madam has answered that.
Yeah. So almost I have taken up every question that is asked. Whichever questions already madam has answered before, I have not taken them up in this entire session.
Okay.
Madam, my chat box is full of messages saying that it was an excellent session and you have covered
Yes,
really almost all parts of economy as well as non-economic factors of the Indian economy. Today, we also have with us our very dear Director of Hindi Vidya Prachar Samiti, Dr. Usha Mukundan Madam. It is only due to her support, which is always there to us, and a very strong motivation, we are able to hold this long sessions of many sessions on different aspects of knowledge. Uh, uh, I request Madam to address us for a few minutes.
Good evening, everyone. And Shubhada,
Madam.
as usual, I'm speechless. The ease with which you tackled all those very diverse questions says volumes. It speaks about the depth of knowledge that you have and your excellent oratory skills. In fact, I hardly gave you a couple of days and you just said yes. And as you very rightly said, we may be away from each other, but we all are very much connected.
Connected.
So we are truly together.
Absolutely.
And one area I really thought that as educationists or people who are in academics, we really don't teach our younger generation, or for that matter, for ourselves also, preparedness. This entire COVID has taken the entire world off guard.
Completely.
And we were really not prepared. And I think even in future, I hope, I pray that we won't have a pandemic or epidemic to this extent, but preparedness is one area I think which is needed.
Absolutely.
The amount of diverse questions that you have answered and the applause that you've been receiving,
Absolutely.
I have absolutely no words. And Shubhada, thank you so much. God
Thank you.
bless.
Pleasure. Thank you.
I'm very sure you're already rebooting yourself. I can
Yes.
see that. And you're acquiring new skills. We all have to do that. And
Yes.
this pandemic, there was a youngster. Many of our students are worried. I think they don't have to worry because they learn things much faster.
Exactly.
And they are prepared for change.
Absolutely.
It is us who have to look forward, acquire new skills, and again reboot ourselves. I just
Totally.
love that word. And thank you very much, Shubhada. And for all
Pleasure.
of you, stay home, stay blessed, but continue learning. Today was a great
Absolutely.
learning session for me. And I'm going to go back and look at some of these which you have spoken. And once again, thank you very much. It is not the single session that we have with you. We'll have many more. And all the dear participants, you have been wonderful. I think the questions which were taken up or the questions which are asked shows the class of participants we had, and I thank each one of you and also pray for all of you that you have a good time, and please don't feel low. Ye din bhi jayenge.
Absolutely. Absolutely.
It is a learning process, so there is no need that we should be thinking low or feeling low. And if we have people like Shubhada, I think we are re-energized. Our immune system is, I think, our serotonin levels are definitely very high now. So we are very happy. Thank you so much. And you also take care, Shubhada. Thanks a lot. God bless you. Thank you very much, all dear participants, and my dear Devi Prasad for hosting this wonderful session. Thank you. And thank you, Mansi ji. Thank you.
Thank you so much. It was
Thank
a
you.
pleasure interacting.
Thank you.
Okay. Yeah.
Thank you.
Thanks. Okay.
Thank
Bye.
you.
Bye.
Thank you. Bye-bye.
Bye. Bye.
Take care. Bye.
Take care.
We end
Bye.
this meeting.
Bye.
We end this meeting with the kind permission of the guest speaker and the director. Thank you, everybody.
Thank you.
Thank you.
Shubhada. Thank you.
Bye. Thank you. Bye. Bye.
Bye, ma'am. Thank you
Bye.
so much.